Buying a home is a big deal, but there's so much misinformation out there. Today, we're busting the top 5 myths about buying a home so you can step into the process with confidence and clarity. Think you need a 20% down payment to buy a house, or that renting is always cheaper? Let's set the record straight on these common myths and more. You won't believe what's true and what's not. Hey, Lindsay, how you doing?
Good. How are you, Joe?
Good. I love this topic.
Me too.
Because there's so, even though we are, as an industry, we try so hard to get the facts out there, there's just all these old bits of information that people can't let go of or are being told. Misconceptions, myths, and mistruths.
Yes.
Right?
It reminds me when I bought my first house, all the things the things that I know now that I wish I would have known then.
Right.
Yeah.
Right. Well, that's why we're here, is to help people understand these things so they don't make the mistakes that we made or we've seen.
So help us help you.
Help us help you. Right.
First one, I think I might have a bonus one at the end, but the first of the 5 myths is, do you need 20% down payment to purchase a house?
20% down payment. And I remember, when I was, right out of college, and then someone told me, hey man, I was like, I want to buy a house. And they're like, well, you probably need 20% down.
I heard the same thing.
And you know what I did? I didn't buy a house. I could have, because I thought that was true, and it's simply not true.
Actually, I think when I bought my first house, I thought the exact same thing, and I was sitting in a leads group. I was in a job at that time where I joined a leads group, and somebody told me in that leads group, do you know you only need 3.5%? And I almost lost my marbles, and I went and talked to somebody that day.
Yeah, right. Cool.
Yeah.
Well, so there's lots of options. I mean, if you're a veteran, you're an active duty, military, there's the VA loan, 100% financing, no down payment necessary for qualified eligible applicants, right? Yeah. You have USDA rural loans, the same people that stamp your beef, right? They're into beef stamping and
land
and home loans for rural areas.
Right.
Now, you have to be in a rural area, you have to qualify, and you have to be eligible, but also 100% financing, no down payment necessary for eligible qualified people in rural areas, deemed rural by the USDA. You have FHA, but before you get to FHA, conventional conforming loans, the ones that are done by Fannie Mae, Freddie Mac, the quasi-governmental agencies,
right?
They only require a 3% down payment.
See, that's wild to me, because that's the one that I always assumed had to be 20% down. Right. I assumed, okay, conventional, it must be 20%. Right. I always thought that FHA meant it was less of a down payment.
Well, we always joke here, FHA means first-time home buyer, right?
Right.
It doesn't actually mean that, but conventional conforming Fannie Mae, Freddie Mac type loans actually have a lower down payment requirement than FHA loans.
That's incredible.
And so FHA loans, Federal Housing Administration, 3.5% down, right? And then it goes up from there. You can, there's other 5, 10, 20, however much you want to put down.
Sure.
But no, 20% down payment, simply not needed as long as you qualify and the payment makes sense for you.
Biggest number 1 myth.
Right.
Well, that brings us to our number 2 myth. Renting is always cheaper than owning. So what's the reality behind the ideal that renting is cheaper than owning?
I really wish I had a good saying about the word cheaper. I can't think of one offhand, but the reality is that if you look at it dollar for dollar, let's say the housing payment and a rents are the same, right? Now your housing payments consist of your principal part of the payment, the interest payment, the taxes, and the insurance, right? So these are parts of your payment. And so let's just say that the just for argument's sake, the rent and the mortgage payment are the same. Well, the thing about the mortgage payment is that part of your payment goes to principal.
Right.
So it's like savings, whereas rent, it goes to your landlord to help them pay their mortgage on that same house.
There's a mortgage there somewhere, but it's just not yours.
Right. Yeah. So that's one piece, is that, yes, the payment might be the same, but you're actually saving money.
Right.
Now, the other parts of owning, there's other parts of owning like maintenance and, and keeping up your house and things like that. But think about this. It's like your house over time, typically, historically speaking, appreciates.
Right.
It's not a depreciating asset like your car or your boat or your RV or any other depreciating asset you've bought recently.
Right.
And it actually, over time, historically speaking, has appreciated. So not only will you enjoy the benefits of putting money away every month by part of your payment, the principal part, but you could enjoy appreciation of the home. And just look, if you have a $300,000 home and appreciates by 3%, let's do some public math. That's $9,000, right?
Wow.
Of appreciation. And 3%, historically speaking, is very normal for appreciation. Now, the last couple of years, we appreciated a lot higher than that, 15, 20, 30% in some of those years.
Yeah.
So, those who bought were very happy they did, right?
Right. Definitely. Well, third myth is your credit score has to be perfect. So how important is credit in the home buying process? And there's a lot of myths around it.
There are. Your credit doesn't have to be perfect. Mm-hmm. Now, the better it is, the lower rate of interest typically you're going to pay.
Sure.
But it doesn't have to be perfect. If you look at just a traditional Fannie Mae, Freddie Mac conforming loan, they're called, 620 credit score and above, right? There's a few errors that happened down there at 620, right? So it doesn't have to be perfect. Now, certain credit events might preclude you from getting a mortgage. Like if you had a foreclosure yesterday, it might be hard to get a mortgage today.
Right.
If you had a bankruptcy in the last couple of years, it might be hard for you to get a mortgage today. Now, certain circumstances, people love to come down below. You can do it if if it was less than 2 years, there's a mitigating circumstance. But I'm just talking about the generally speaking, there are specific circumstances where, yes, you might be able to get a loan. But, those are things that might preclude you short term, but don't assume they do. Talk to a professional here.
Yeah.
But the other, not only is the lower of the credit score, there are other options even below 620. Mm-hmm. Now we don't, there's other companies that specialize in that, but there's options out there. Mm-hmm. But if you're under 620, there's things you can do to bring your credit up, and then over 620, there tends to be a lot more options.
Yeah.
But your credit does not have to be perfect.
So do they view you as being a higher risk person to lend to with a lower credit score?
If you have a history of lower credit, which means, you have trouble making payments on time, or maybe you're over leveraged or things like that, then yes, you're looked at as a higher risk. And that's what it comes down to.
Gotcha. So myth number 4 is you can't buy a home with student loans.
Oh, okay. So it's funny you say that, because
this probably deters a lot of those first-time home buyers, because a lot of them have student loans.
Right. And, I still am shocked that the 20% down thing is number one.
Yeah.
Because this is the question I get a lot. Mm-hmm. I have student loan debt. Can I get a mortgage?
Yeah.
I have student loan debt. Can I get a mortgage? And I always say, I don't know until I look at the details, because it doesn't preclude you from getting a mortgage.
Okay.
So if you have student loan debt, it's not that you have debt. It's how much that debt is, how much that monthly payment of your debt is, and what that looks like in your total financial picture. Like if you have a lot of other debt, your debt to income, how much outstanding monthly debt obligations you have versus how much money you make, gross monthly income, that ratio there has to be in line with the guidelines of, depending on what kind of loan you're doing, right? VA, FHA, USDA, Fannie Mae, a lot of those, right? So as long as that debt to income ratio is in line, then you can get a mortgage and you qualify based on all the other items. So no, it doesn't preclude you from getting a mortgage. If you have student loan debt, credit card debt, and all these things, it's good to get rid of that, but you might be missing out on an opportunity to grow and build wealth.
Right.
So make sure to ask. Don't just say, I can't get it, I get student loan debt, or I got to put 20% down. Mm-hmm. It's time to ask someone or talk to a professional like the ones here at Morgan Financial. And by the way, if you're not a subscriber and you've made it this far, please hit the subscribe button.
Yeah.
And like our comment. I'd really, really appreciate it. Put down below your thoughts so far.
Mm-hmm. My thought so far is my resounding word that keeps coming up is not to be assuming. Don't assume that all of these things are going to keep you from getting a house. And I think that's what stops people from taking that first step or reaching out to a loan officer and having a conversation. I think getting as much education as possible will help you myth bust.
And that's why we're here, right?
Right.
We're trying to give people the education so they can make good, sound decisions.
Yeah.
But it does the assuming piece, that saying, when you assume, you make an ass out of you and me, right?
Yeah.
Okay.
Yeah.
Well, I don't mean to be derogatory towards people out there, but the reality is that, don't assume things.
Yeah.
I'm telling you right now, it's always best to talk to a professional who has a vested interest in your success.
Of course.
Right?
Yeah.
So mortgage loan originators here at Morgan Financial, they help you with your total picture. Mm-hmm. If you don't currently qualify, we're going to tell you the things you might need to do to potentially get qualified in the near or long term, depending on the situation.
Yeah.
Right? So I hate telling people no. I do not like it. But, sometimes you have to say, it's not a no, it's just a no right now.
Yeah. And these are the steps, if it's a not right now, what to do to make sure that we can get you there.
And that's important.
Yeah. Well, I got one more for you.
Okay, cool.
The housing market
Yep.
is too competitive right now.
Okay. Or not competitive enough, right? So the housing market is too competitive right now. I don't know if that one changes. It might be one of the myths might be I'm going to wait along the same lines. I'm going to wait for housing prices to drop.
Right.
I think that's a more recent one that I've heard a lot is I'm going to wait till the interest rates drop, or I'm going to wait till the housing prices drop. And I've heard this for 3 years.
And what's happened in those 3 years?
Prices have gone up.
Yeah.
Everyone says, I'm waiting for the market to crash. I have a friend who's been waiting since 2014 for the market to crash to buy a house.
Oh, goodness.
That's 11 years ago.
Yeah.
And he would have almost tripled his return on investment if he put I don't even go into the math. If he put 20% down to leverage a $300,000 house and that house is now worth $600,000.
Yeah.
Well, that's 5 times 3. He could have 15x'd his original investment of 20%.
Yeah.
I think I did that math wrong. I was really quick in my head, so maybe I did it wrong. Someone will correct me down below. But the reality is that because you're leveraging your money, if you put 20% down, you're leveraging 5 times that amount, 100%.
Yeah.
And if it doubled in price, then that would be a 10x of his original investment if he sold his house now. But the reality is that prices have gone up. Prices have gone up. Interest rates have gone up.
Yeah.
And not me, but the majority of people out there thought prices were going to come down.
Yep.
And they might have come down in certain markets. In ours, they have not.
Yeah.
Maybe in certain niche, there's not the same frenzy out there, but prices, historically speaking, over time go up.
I think a lot of these issues pop up in people's minds, but it always goes back to talk to a lender.
It does.
Educate yourself.
And I hate saying that because it sounds very
self-serving.
self-serving.
Yeah.
But that's the reality.
Yeah.
Don't count yourself out.
Well, that's all the misconceptions and myths that I had for you today.
Cool. Well, thanks, Lindsay.
Yeah.
Look, if you're not a subscriber, just do me a favor. Hit the subscribe button now. It's not going to take you a lot of time. You can even hit the bell notification so you're going to get into your inbox the second we put out new content. And if you haven't liked and you've been here this far, just hit the like button or say hi down below in the comments just to let me know you made it this far. Thanks again for watching.